So if you're preparing for Caiib exam, then do watch this video till end, because in this particular video we are going to cover the very important topics, and further this video is going to be very important for you for the upcoming exam of Caiib. So whether you are going to prepare in Hindi mixed English language or you're preparing in English language, both the courses are available with the learning sessions over there, which you can basically be enrolling, signing up at our website, that is mentioned on the screen over there and also present in the description box below. Or you can simply scan the QR code over here and further can navigate to the website over there, or you can alternatively download our Android application, which is available in the name of IIBF Learning Center. And if you are iOS user, do download My Institute application and use the organization code GEGKT and start preparing for the same. We are having the full course for Caiib, in which we will be covering all the 5 papers of the Caiib, including the 5 elective subjects over there. And further, those are available in Hindi mixed English language. The electives are available only in bilingual language and not available in English language. But in English language, we are having the full-fledged 4 compulsory subjects, and we are covering the full course videos which are covered in chapter-wise manner. We are having the full course case study videos, and we are having the chapter-wise previous questions, mock test, mega mock test, each and everything is there. And also we are going to provide you with the complimentary access to the ePDF notes, so as that you can escalate your revision throughout the time when you will be preparing for the Caiib over there. So do enroll right now and start preparing for the same, and don't forget to watch this video till end. And further, if you like this video, do like this video and share this video among your friends and colleagues who have been preparing for Caiib.
We were covering NRO and NRE account. So we learnt about something that NRE account is for the funds which the person is bringing from outside India, and in NRO account we can receive the funds from outside India also, that the foreign currency inward remittances can also be credited over here, and also the local earnings or the domestic earnings, if the person is having, those would be credited to these particular accounts. Okay, and for the transfer from NRE account to NRO account is permitted, and also the transfer from NRO account and NRE account is also permitted, but up to the prescribed limits only. Okay. So now let us learn about the FCNR accounts. So we learned something that NRE and NRO both are Rupee account. In both the accounts, the balances are maintained in domestic currency, that is in Indian rupee. Okay. Whereas in the case of the FCNR account, the currency would be the foreign currency. It would be the foreign currency in which it will be maintained. But in case of NRE and NRO account, both the accounts are maintained in Indian rupee. And further, related to it, the form of the account opening can be in the form of the saving fund account, or it could be a current account, it could be a fixed deposit account, it could be a recurring deposit. But in the case of FCNR account, I told you that these accounts are maintained in the foreign currency. So in any of the freely convertible currency, the account can be maintained, which includes the US dollar, euro, GBP, that is Great Britain pound, Japanese yen, Canadian dollar, and Australian dollar. Okay, so this account can be maintained in these freely convertible currencies. And further, the account type would be only and only the fixed deposit. Even you cannot open the recurring deposit account in the case of the FCNR account. So NRIs are permitted to open these accounts. And these accounts are maintained in the foreign currency, freely convertible foreign currency, and these accounts can be opened in only and only in the form of the fixed deposits account. So NRI can open these accounts in the form of the term deposit, not the recurring deposit, and it is having a minimum maturity period of 1 year and maximum maturity period of 5 years. So it will be opened for a minimum period of 1 year and maximum period of 5 years. Is it clear? So we get to know that in case of NRE account and NRO account, we are maintaining those accounts in Indian rupee, whereas in case of FCNR account, we are maintaining the account in the foreign currency. And also the foreign FCNR accounts, that is a foreign currency non-resident account, can be opened only and only in the form of the fixed deposit, not the recurring deposit. Minimum tenure would be 1 year and the maximum tenure would be 5 years. And further related to that, let us learn about it. So it says the deposits are in foreign currency are repaid in the currency of issue along with the interest. So whatever currency you have deposited in the FCNR account, if you have deposited the Canadian dollar, you will be earning the interest as Canadian dollar, and that only amount would be paid to you. And it is freely repatriable. There are no limits, there are no restrictions as it was in the case of the NRE deposit account. So we learned something that in the case of the NRE account, there is no limit on repatriation. That is, if you want to remit the funds in the NRE account outside India, that is freely permitted. But in case of NR accounts, there were restrictions related to it. But also in the case of the FCNR account, there is no restriction. There are no restrictions. And is joint account opening possible in the case of the FCNR account? Yes, it is possible. Deposit account can be either opened individually or it can be opened jointly with NRIs or PIOs or OCIs, and the account operation would be the former or survivor. The account operation would be former or survivor, as we have learned in the case of the NRE account also. So the joint operations would be same as that of the NRE accounts. Okay, in the case of NRO account, the joint accounts could be opened with the residents also, Indian residents also. But in case of NRE accounts and also in the case of the FCNR bank accounts, the accounts can be opened only and only with the NRI, PIOs or OCIs and no one else. Okay, further other facilities which are available. So there is first of all no exchange risk, because you are not going to convert your currency into domestic currency, then again to convert it domestic currency into foreign currency so as to remit outwards. You just maintaining the account in the foreign currency, so there is no exchange risk involved. And further repatriation of the principal amount and along with the interest amount is permitted, and the interest on the deposit shall be paid on the basis of 360 days. And further nomination facilities also available in this particular case, and income earned by way of interest is exempted from the income tax, because the amount that you will be depositing in this particular account, the amount that will be depositing in this particular account, it will be in the form of inward remittances or the balances which are transferred from the NRE accounts or the other foreign currency deposit accounts. Is it clear? So either there will be the inward remittances, or you will be depositing from, or you will be debiting your NRE account and will be depositing into the FCNR account. So that would be the case. So the income, interest income that you are earning in the case of the FCNR account is also exempted from the income tax, because you have not earned that income in India, you have earned it outside India. So no operation by way of power of attorney. In no case, the operation will be permitted by way of power of attorney to the resident is or there, because there are no local withdrawals, and further forward cover can be booked to hedge the balance held in FCNR account. You can cover it with the forward contract. Let us suppose that you are maintaining 10,000 USDs in the FCNR account. Let us suppose you are maintaining 10,000 USDs in the FCNR account, and further you want to sell these foreign currency. You want to sell this foreign currency after the maturity. In that particular case, you can book the forward contract. So as to safeguard yourself for the balances in the FCNR account. Is it clear? And further, next it is related to the premature withdrawal of the deposits. So no interest is payable. Very, very important. So no interest will be payable if the withdrawn is before 1 year. So 1 year is not elapsed and you are going to premature withdraw the deposits in the FCNR account. In that case, no interest will be paid. And further, if you are going to premature withdrawal after the completion of 1 year, in that case, interest will be paid. At the rate available on the date of deposit for that particular period. So whatever period has been elapsed, let us suppose the 2-year period is elapsed. 2 years period is elapsed. So now 1 year is now elapsed. In that case, interest will be paid, because from 0 to 1 year, if you are maturing that particular period, if your premature withdrawal is being done in first year itself, then in that case, no interest will be paid. But if it is done after the completion of 1 year, in that case, interest will be paid as per the time period elapsed. So in that particular case, we are assuming that 2 years have been elapsed. So the bank will be paying us the interest rate as per the 2 years rate available. And further, after cutting down the swap cost or any of the other cost. Okay. So if there is any penalty cost or swap cost, that will be levied by the bank discretion, and the rest of the amount would be paid along with the interest applicable. Is it clear? So we can say on a nutshell, premature withdrawal is allowed, but up to 1 year. If the premature is done within 1 year, in that case, no interest will be paid. Otherwise, the interest would be paid. Okay. After that, it is related to the differences between the NRO, NRE and the FCNR account. Very important to note it down. Very important. So who can open the NRO, NRE and FCNR account? In each and every case, NRA person and the OCI person, that is OCI person, will be opening the account. And what would be the currency of the account? In the case of NRO, NRE, both are the Indian rupee accounts. In case of FCNR, it can be opened in the case with the freely convertible currency. So all the convertible currencies it can be opened with. And what would be the source of funds? What would be the source of funds? So in case of NRO accounts, local deposits, local money can be deposited, local incomes can be deposited, and further also the funds you have brought from abroad, those can also be deposited in the case of NRO accounts. But in the case of NRE and FCNR accounts, only and only the amount as such, the inward remittances will be deposited. Only and only the amount from the inward remittances will be deposited, and also the amounts from the different NRE and FCNR accounts is also can be deposited to these particular accounts. And these accounts can be opened, NRO and NRE accounts can be opened in the form of the saving fund account, current account, recurring deposit account, fixed deposit account. But the FCNR account can only be opened in the case of the as in the form of the fixed deposit account. And what is the minimum and maximum period? As per the domestic term of the deposit, if we say for the term deposit, the maximum period is 10 years, up to 10 years. Now it can be maintained in that particular form for the NRE and NRO accounts. But in the case of the FCNR account, the minimum maturity would be 1 year and the maximum would be 5 years. Okay, that is related to it. Then it is a case of the joint account. Can the joint account be opened? Yes, the joint account is permitted in 3 of these. In 3 of these, the joint account is permitted. But in the later 2, that is the case of the NRE and FCNR account. In the case of the NRE and FCNR account, the joint operations are permitted as former or survivor operations only, and you can do open account jointly with the NRI persons only. But in the case of the NR account, you can also do open the joint account with the resident, Indian residents. Okay, nomination facilities available in 3 of these, and then it is related to the repatriation. So the repatriation is allowed within the limits, whereas in the case of NRE and FCNR deposits, the repatriation is freely amount is freely repatriable. So is there any tax benefit available in the case of NR accounts? The interest income earned in the case of the NR account is applicability, there is TDS applicability. But in case you have earned the income earned the interest in NRE accounts or FCNR account, that is basically exempted from all kind of taxes. And further, it is related to interest rate. So the banks can freely determine the interest rate that they are going to pay to the NRO and NRE accounts. And further, you need to understand that the banks are free to determine the interest rates on the saving fund account or the term deposit account of 1 year or above. In both the cases, if the maturity of if the tenor of the account is 1 year or above, banks can freely determine the rate of interest they are going to pay. But the banks need to keep one thing in mind: they cannot pay the interest which more than the interest they are paying to the domestic account holders. Okay, so if in the domestic saving fund account, let us suppose they are paying 3.5% of the rate of interest, in that case they cannot pay to the NR account. If the NR account is opened in the form of the saving fund deposit account, they cannot pay the amount of the interest more than 3.5%. This is to be noted down. And further also, that is applicable in the case of the FCNR account. So banks are at their discretion can determine the interest rate, but they cannot basically go beyond the interest they are paying to the domestic account holders. Okay, and also banks are free to determine their interest rates on saving fund accounts. In the case of NR accounts, interest rates on NRE and NRO deposits cannot be higher than that of the domestic rupee deposits. Is it clear? And in the case of the FCNR account, fixed or floating interest within the ceiling rate of the respective LIBOR or plus the swap rate or 200 basis point, that can be given. But if the maturity is lesser than that of 3 years, and is greater than of 1 year, because in case of FCNR the minimum maturity would be for 1 year. So if the maturity is between 1 to 3 years, in that case the maximum interest that can be paid would be LIBOR plus 200 basis points, and also if the maturity is above 3 years, in that case it can be paid up to LIBOR plus 300 basis points. Is it clear? So LIBOR is what? It is London interbank offered rate. So it is used as the benchmark rate. But now Reserve Bank of India has issued the directives to the banks so as to deviate from the LIBOR and to use the MIBOR and the other source benchmark rates. Is it clear? Then it is related to loan against NRE or FCNR deposits. So there is no ceiling limit now. Earlier the limit was rupees 1 crore. Earlier the limit was rupees 1 crore, but now there is no ceiling related to it. If any of the NRI person or the OCI person approaches you that he wants to avail a loan facility against the deposit, that is allowed. That is allowed, and there is no ceiling limit now. NRI OCI is allowed to transfer repatriate funds from their NRO account. So let me tell you one thing. If the NRO person, if the NRO account holder wants to transfer, wants to repatriate funds outside India, that is also allowed up to a limit, up to a ceiling limit of 1 million USDs per financial year. It is 1 million USD per financial year. So this is the limit for one financial year after payment of the eligible taxes. It must be kept in mind that all the eligible taxes, TDS, wealth tax or any other tax must have been debited. Only after that this amount can be repatriated up to this prescribed limit of 1 million USD per financial year. Okay. And also this repatriable amount can also be credited to the NRE account. I already told you that the NRO account balance can also be transferred to the NRE account up to the extent the person can repatriate the amount. Up to the extent the person can repatriate the amount. If he does not repatriate the account and he wants to transfer the NRO account balances to the NRE account, that is permissible. That is permissible up to the limit of 1 million USD per financial year. Is it clear? Then it is related to facilities to NRIs. Facilities to NRIs. So NRIs have been allowed to invest in India. So they can do invest in share market, they can do invest in the companies, they can do invest in the properties too. But there are different restrictions. We will have a look at it. So the investment by the by the NRIs are regulated by the regulations which are prescribed by the FEMA. So whatever the regulations have been prescribed by the Foreign Exchange Management Act 2000, those are to be looked into, and as per that only the investments can be made by the NRIs. And then these regulations cover issuance of security by the Indian company, so they can do invest in the Indian company shares or entity to a person resident outside India, purchase and sale of security. So they can also do sale and purchase of security. Okay. So now let us have a look at the different perspective of these. So it is related to investments in shares or securities. Investments in shares or securities. So investments by NRIs can be done on a repatriation basis. So that amount that they want to invest in India, and further they want to repatriate it also. So at the same time they are saying that they will be repatriating the amount too. So that is the first case. And the other case is that they want to invest this particular amount in India itself. They want to invest this particular amount in India itself, and that is it. That is on non-repatriation basis. So the investment on repatriable basis can be made in shares, bonds, securities. You must be noted down. So if you want to invest in India, if the NRI person wants to invest in India on repatriable basis, that he wants to also take back the money back to the foreign country, in that case that is allowed. They can do invest in the shares, bonds, securities, and further these funds can be invested if they have inward remittances from the abroad. Or they can do debit the balances in their NRE or FCNR bank accounts. Okay, so as an investor, how they can do invest? They must be either bringing the money from outside India, or they can do debit the balances that they are maintaining in their NRE and FCNR accounts. Okay, so by that way they can do invest the money in the Indian shares, bonds, and further securities, and that can be done on a repatriable basis. Then second one, it is general permission has been granted under the regulations. So under the regulations of the FEMA, a general permission has been granted to any person who is a resident outside India. That means to any person who is a resident outside India, they are generally permitted that they can do purchase the equity or the preference shares or the convertible debentures of any Indian company, subject to the maximum cap as per the prescribed prescribed guidelines. So whatever the maximum cap is there, let us say if the percentage is fixed to be 26%, that you cannot go beyond the 26 percentage capital investment in some company. In that case, of any person who is not a resident of India, they cannot go beyond the investment in that particular case. Up to they can do invest up to 26%, but not beyond 26%. Is it clear? So as a general permission, any person who is a resident outside India, they can do invest into the equity. They can do invest into the equity, and further they can do invest into the preference shares or the convertible debentures of an Indian company, subject to some conditions. That is a maximum capital that they can invest into the Indian company. And then it is, however, investments in shares and securities by NRIs have been further classified. So these investments are further classified as investment under foreign direct investment, that is FDI, investment under FDI, or investment under PIS, that is portfolio investment scheme, or purchase and sale of shares on a repatriable basis, purchase and sale of securities other than shares and convertible debentures of an Indian economy. So these are the other four dimensions for the investments which can be done by the resident outside India. Okay, so first of all, it is investment which can be made under FDI, and then it is investment can be done under the PIS scheme also, that is a portfolio investment scheme also, and purchase and sale of shares on a non-repatriable basis, and purchase and sale of securities other than shares and convertible debentures of an Indian company. That you want to do sale and purchase of the securities, but that would not be related to the shares and the convertible debentures. In that case also it is permitted. Okay, so NRIs can invest in shares of Indian company listed in the recognized exchange under PIS. Okay, so what is portfolio investment? Basically, under the portfolio investment scheme, they do connect with some institutional buyers. Those are maintaining their portfolio, and under this, the investors they will be investing in different companies. So they can do invest in that particular way. So they can do invest in that particular case. That is a company which are listed on the recognized stock exchange. The companies which are listed on the recognized stock exchange, the persons resident outside India are investing into those particular companies through the PIS, that is a portfolio investment scheme, through a designated authorized dealer branch. Okay, so let us say this is a authorized dealer branch which is maintaining their portfolio. So this is PIS scheme which the AD is maintaining, authorized dealer is maintaining, and further they are investing through this AD in the stock exchange. Okay, so that is a case related to it. That is a case related to the second point over here. Okay, and further, transfer as gift. So NRIs can transfer such securities. So whatever securities they have invested into, they can do transfer these particular securities to some other NRI, or also to the resident of India by way of gift. So by way of gift, they can do transfer the securities to some another NRI or to resident of India. Okay, then it is a general permission for remittances of sale proceeds. So general permission has been given. So general permission has been granted for remittances of the sale proceeds of securities. So they have invested into these particular securities. Now, what if they just sell the securities? So there is a general permission related to it. What it is? So RBI has granted a general permission for remittances of the sale proceeds after paying the applicable taxes. If the NRI person sells the security, they can do repatriate the rest of the amount, okay, which was originally brought for acquired out of fresh remittances from abroad or balances held in the NRE FCNR bank account. Only and only that particular amount can be repatriated which was brought in by them by way of fresh inward remittances, or which amount they have used so as to debit their NRE and FCNR account. Only repatriation up to that particular amount is permissible as per general permission. What it means? It means if the NRI person brought 1 million USD and also he debited his NRE FCNR accounts with 0.5 million USDs and invested into the PIS through the authorized dealer, and after that he sold these securities. So he just invested 1.5 million USDs. So he invested 1.5 million USDs into the equity through the PIS and further sold these securities for 1.7 million USDs. Let us say he sold these for 1.7 million USDs. So in that particular case, he will be able to repatriate as per the general permission up to the amount of 1.5 million USDs only. As such of the general permission, he would be able to repatriate up to the amount of 1.5 million USD only, because he has brought in originally or acquired out of the fresh remittances from the abroad 1.5 million of the securities over here. Is it clear? Okay. After that it is a securities purchased on non-repatriable basis. Sale proceeds are to be credited to the NRO account of the investor and not to the NRE or FCNR account. Is it clear? So if he invested money into the stock exchange, whether through FDI, whether through let us say PIS or any other scheme, okay, he invested into the stock exchange on non-repatriation basis, that he'll not be taking back the money to the foreign country. In that particular case, when he sells the security, the amount is to be credited to his NRO account only after paying all the applicable taxes. After paying all the applicable taxes, the proceeds of these securities will be credited to the NRO account and not to the FCNR or NRE accounts. Is it clear? Is this point clear? Okay. After that, it is related to investment in exchange traded derivative contracts. So NRIs have also been permitted to invest in the exchange traded derivative contracts. Exchange traded derivative contracts means, I already told you that there are two type of derivative contracts. One, it is a OTC, that is a over the counter contracts, and the other one, it is a exchange traded contracts. Exchange traded contracts, because these are standardized and regulated. So NRIs have been permitted that they can invest in exchange traded derivative contracts, okay, such as futures. They can invest in futures, so it is traded on the stock exchange, okay. So NRIs are permitted to do so. And further, out of rupee resources that can be done on a non-repatriation basis. Out of the rupee resources, it can be done on a non-repatriation basis, subject to the limits which have been prescribed by the Reserve Bank of India. Okay, so that can also be done, but out of the rupee balances on non-repatriation basis. And what are the other investment avenues which are available? So NRIs can invest into the units of the UTI, or they can invest into the mutual funds on a repatriable basis as well as non-repatriable basis. You need to know one thing only: if it is on non-repatriable basis, in that case the proceeds will be credited to the NR account, and if it is on a repatriable basis, the proceeds can be credited to the NRA accounts also. Okay. And what about the company deposits? Can NRI be permitted to invest into the company deposits? Yes, they are permitted to invest into the company deposits on a repatriable basis, provided the deposits have been over there for a minimum period of 3 years. If they have deposited the money for at least 3 years, in that case the investment can be made by the NRIs into the companies on a repatriable basis, and those investments must be within the prescribed limits by the RBI. Okay. And further, those investments must be coming from the inward remittances, or the amount from the FCNR or the NRE accounts can be used. And then it is related to investments in partnership firm or proprietorship concern. So an NRI is permitted to invest in the partnership firm or proprietorship concern by way of capital contribution. They can invest, provided the concern is not engaged into any kind of agricultural, plantation activity or real estate business so as to earn profit from it. So if the partnership firm is indulged in the agriculture or plantation or the real estate business so as to book profit from it, in that case NRI person is not permitted to invest. Otherwise, he is permitted to invest in the partnership firm by way of capital contribution, or in the proprietorship firm by way of capital contribution. The contribution should be by way of fresh inward remittances. the contribution should be by way of fresh inward remittances, or the NRI person can use the resources of the NRE or FCNR bank deposit account, and the amount so invested shall be permitted to be repatriable out of India subject to taxes. So whatever amount they have been contributing as a capital to the proprietorship firm or the partnership firm, that is basically permitted to be repatriable as per the guidelines, but it is subjected to taxes also. So whatever income has been earned out of these capital contribution, that is basically subjected to tax. Okay. Then further, it is related to the investment in immovable property. Investment in the immovable property. So a person resident outside India who is citizen of India is permitted to acquire any property in India. He can acquire any property in India other than the agriculture property or for plantation purposes or any other immovable property, just for speculating or earning the profits from it. In that case, the acquirement is not allowed. Otherwise, if there is any person who is NRI and who is a resident of India, he can acquire the property for his own use or for the purpose of the business activities And also NRI can acquire such property out of funds received in India by way of inward remittances. So if he has received any of the amounts as per the inward remittances in his NRE or FCNR accounts, he can use those particular amounts. He can use those particular amounts so as for acquiring such property, and further, or from the balances held in any non-resident rupee account or foreign currency account maintained in India, he can use those balances too. And further, NRI can also acquire such property by way of gift by a person resident in India. Okay, so if any person is gifting some property to him, that can also be done. He can also acquire such property, or from any person who is resident outside India, who is a citizen of India. So let us suppose the case that person A is residing over here in India, and person B over here is NRI who is a resident of India, and person C over here is also an NRI who is also resident of India. So all three are resident of India, and person B and C are NRI. So it could be the case that person A may have gifted a property to B person over here, or it may be the case that a person C who is also an NRI person but he is resident of India must have gifted a property to the person B over here. Okay, so that is the case that we should be understanding in this particular point. Okay, after that, it is a NRI can also acquire any immovable property in India by way of inheritance. Let us suppose his parents or grandparents were here in India and he is resident outside India. Or it may be the case that his parents are also living outside India. Those are also NRI, but they are resident of India. In that particular case also, the property can be acquired by the person who is NRI but resident of India by way of inheritance. And further, it is related to repatriation of sale proceeds of immovable property. Now let us say person A has acquired an immovable property. And he just sold this property. And the proceeds of this property are credited to the NRO account now. These are credited to the NRO account now, and person A wants to repatriate this amount. This amount. So that is what we are going to learn right now. So it is related to repatriation of sale proceeds of immovable property. So banks are allowed to permit repatriation of sale proceeds of immovable property, but it should not be relating to any kind of the agricultural property or any of the property where there is a plantation, or it may be in the case of the farmhouse also. In that case, repatriation is not allowed. In other case, if the property was for personal use, or it is in accordance with the foreign exchange regulations, in that case it is allowed that the amount can be repatriated by the banks itself. Okay. Further, the sale proceeds required to be repatriated does not exceed the foreign exchange brought in to acquire the property. So whatever amount was brought in from abroad, if the immovable property was sold at a higher price, let us suppose he brought 1 million USDs from outside India, and further he sold the property for 1.5 million USDs. In that particular case, he would be allowed to repatriate the amount up to the limit of 1 million USDs only. 1 million USDs only as per the general permission, and in case of a residential property, the repatriation of sale proceed is restricted to not more than 2 properties. That is if it was a residential property and further he sold the property, in that case a repatriation can be done only and only for the 2 properties and not more than that. It should not be the case that NRI person was possessing 4 or 5 houses and he sold all of those and he now wants to repatriate the amount back to some other country. So that cannot be allowed. The repatriation can be allowed in the case of the residential housing up to 2 properties only. And further, banks are now permitted to allow repatriation of the funds out of the balances held by the NRIs in the non-resident account up to 1 million USDs per year. So per year 1 million USDs of the amount can be repatriated by the NRIs that they are maintaining in their non-resident accounts. Okay, and such amount must be representing the sale proceeds of the immovable property. Such amount must be representing the sale proceeds of the immovable property. That amount can be remitted up to the limit of 1 million USDs per year without any lock-in period, but all type of taxes must have been paid. Okay, so non-resident Indian is also permitted to acquire any commercial or other property. So if NRI person wants to acquire any other commercial or any other property which is incidental or necessary for his business interests in India. So if he is here so as to invest in India or for the business activity and he wants to acquire some property for the business purposes or any of the other purposes which is related to his business activities, in that case it is allowed. Then it is related to the other investments. So NRIs can also without any limit purchase on non-repatriation basis dated government securities. So if the investment is to be made on non-repatriation basis, in that case they can do invest without any limits into the government securities, government dated securities, the treasury bills, units of domestic mutual funds, units of money market mutual funds. Okay, so they can do invest without any limits. There is no ceiling related to it if they do want to invest on a non-repatriation basis. Is it clear? And they are not permitted to make investments in small saving schemes like PPF. Okay, so they are not permitted to make investments in the small saving schemes. Then it is related to advances to non-residents and third party advances against NRI deposits, guarantee and other loans. So first of all, it is related to rupee loans in India. So what type of loans are permitted to the NRIs? So banks are permitted to grant loans to the non-resident Indians account holders against the security of the funds held in the NRI term deposit accounts. Let us suppose person A is an NRI, and he is maintaining balances of 1 million USDs in his FCNR account. In that case, if he approaches the bank so as to avail a term facility, so as to avail a advance against the FCNR deposit, that is allowed after maintaining proper margins. That is allowed, and there is no limit related to it. Previously there was a limit of 1 million USDs, but now there is no limit related to it. And for the purpose, what would be the purpose? It must be for the personal use. Either the amount is for the personal use or for carrying on the business in India itself, except for the purpose of re-lending. So no amount shall be sanctioned, no loan shall be sanctioned for the purpose of re-lending or for investing into the land related to the agriculture purposes or plantation activities or any other speculation in the real estate business so as to earn the profits out of it. And further, making direct investments in India on a non-repatriable basis. So if person wants to avail a loan so as to make an investment in India on a non-repatriation basis, in that case also you can do sanction a loan to the NRI person. And further, if they want to acquire, if the NRI person wants to acquire the house or flat for his personal use in India, in that case also the loan can be sanctioned to the NRI person. Is it clear? And the loan amount would be credited to what account? It will be credited only and only to the NRO account and not to the FCNR or NRE account. Okay, so what would be the purposes? First of all, the loan amount must be sanctioned for the personal use purposes or for the business act for carrying out the business activities, but should not be used for the re-lending purposes, should not be used for the activities like agriculture activities or plantation activities or investment in the real estate for earning the profits out of it. And further, if he is going to invest into the Indian companies on non-repatriation basis, in that case also the loan can be sanctioned. And further, it can be sanctioned for acquisition of a flat or house for his personal use in India. Then it is a case of the credit of loan amount. So as I told you, the loan amount such sanctioned shall be credited to the NRO account only and not to the NRE or FCNR bank account. And what is the limit of loan amount? What is the limit of the amount of the loan? There is no ceiling limit. There is no ceiling limit. It is based upon need and the value of security. And related to margin, bank shall maintain reasonable margin. Bank shall be maintaining the reasonable margin and may maintain and may determine the same on case to case basis. So the margin can be determined from case to case basis. And what about the repayment period? Repayment of loan shall either from the inward remittances. So either the loan should be repaid from the inward remittances or using the balances of the NRE of the FCNR accounts. Okay, so if either the amount should be inward remitted, or the amount of the NRE or FCNR accounts should be used, or it could be the case that on the maturity of the FCNR account or NRE deposit account or NRE deposit accounts or NRO deposit account, term deposit account, the proceeds were credited to NRO account, and those proceeds can also be used so as to settle the term loan account. Is it clear? Then it is related to foreign currency loans. So it may be the case. That they want to. It may be the case that the NRI person wants to avail a loan in the foreign currency. So banks are even permitted to use their foreign currency reserves so as to sanction the loans to the NRIs in foreign currency. And banks may give foreign currency loans to the account holders against the securities held in the FCNR deposits. So foreign currency loan can be sanctioned. But it can be sanctioned only and only against the FCNR deposits, because the NRE and NRO accounts are maintained in the Indian rupee denomination. In that case it is not allowed. But for the FCNR deposits, if you are maintaining, in that case the loan can be sanctioned in the foreign currency also. And further, it cannot be sanctioned against any of the third party deposits. Like if we say person A is NRI and person B is a resident of India and he is accompanying person A, and person B is also maintaining deposits with you. B is also maintaining deposits with you, and person B says that he is maintaining the deposit and he wants to avail the loan against it, foreign currency loan against it. It is not allowed. Only and only the deposits the person A, that is the NRI person, is maintaining in his FCNR bank account, that is a foreign currency non-resident bank account. Only and only for those balances the loan amount in the foreign currency will be sanctioned, and that will be sanctioned only and only to the account holder on the execution of the documents by the account holder only. The documents must be very important. The documents must be executed by the account holder only and cannot be executed by any other party, not even by the power of attorney holder. And the maturity of the loan should not be exceeding the maturity date of the deposit. And further, loan shall be sanctioned for the purposes other than investments in the India. So no loan in foreign currency can be sanctioned for investments in Indian company. If they want foreign currency loan, that must be sanctioned, but for purposes other than investments in India. And repayment should be done either from the fresh inward remittances, so the amount can be repaid out of it, or the amount can be repaid out of the maturity proceeds of the deposits, or it can be paid out of the maturity proceeds of the deposit. It cannot be the case that the amount in the NRE or NRO account or the can be used for so as to repay the account, because the NRE and NRO account is being maintained in the Indian rupee account, so that cannot be utilized so as to pay the FCNR, the loan availed against the FCNR balances. Is it clear? Then it is a case of the loans to third parties. It is a case of the loans to third parties. So banks may grant loans to third parties against the security of funds held in the non-resident deposit accounts. So if person B is accompanying person A is NRI, person A is NRI, and further person A visited the branch and he said a loan is to be sanctioned to person B as against the security of the deposits which are maintained by person A over here. That is allowed? Yes, that is allowed. That can be done. That can be done. But first of all, you need to know one thing, that the foreign currency loan cannot be sanctioned. Only and only the rupee loan can be sanctioned. And further, there should be no direct or indirect foreign exchange consideration. What does it mean? It means it should not be the case that person A is allowing so as to grant person B a loan based upon the security of the deposits, and on the back channel he is taking the foreign currency from person B. So that should not be there. And further, it is related to regulations relating to margin, rate of interest, purpose of loan shall be as per the Reserve Bank of India guidelines. So those guidelines are to be fulfilled, and the loan amount should be utilized either for the personal purposes. So the B can utilize this particular amount. So the amount which will be sanctioned to person B over here against the deposits held by person A and another person over here, that can be utilized either for personal purposes or for business activities, or for carrying out the business activities, but not related to the agriculture or plantation activities, or it should not be related to any of the real estate business so as to earn the profits out of it. And further, non-resident depositor should himself execute the documents in the presence of the bank officials. So the documents are to be executed by the non-resident person himself in the presence of the bank officials, and further in the presence of the acceptable witness to the bank. And loan should not be granted on the basis of power of attorney. No loan can be granted on the basis of power of attorney over here in that particular case. And further, it is related to housing loan in rupee to non-resident Indians. Can a housing loan be sanctioned to the non-resident Indian? Definitely it can be sanctioned, but there are some conditions. First of all, the loan can be sanctioned for the purpose of acquisition of a residential property for personal use. Okay, and the quantum of loan, the margin money, and the period of repayment, that shall be same as applicable to the resident Indians. So whatever the conditions are applicable on the resident Indians, that must be complied with in the case we are sanctioning a loan, housing loan to the non-resident Indian. First of all, that point is very important. Second, it is related to loan amount shall not be credited to the NRE or FCNR account. That shall be credited to the NRO account only. And further, the loan shall be fully secured by way of equitable mortgage. So whatever housing, for whatever property you are going to sanction the loan, in that case the charge of equitable mortgage must be created. On the proposed property, and further repayment shall be by way of remittances from the abroad. So the loan will be repaid. From the inward remittances, fresh inward remittances, or it could be the case that the NRI person is having balances in their FCNR bank account, NRO account, or NRE account, that can also be debited so as to repay the loan amount. Or it could also be the case that the future rental income can also be considered for the repayment of the loan account. Okay, that is related to it. So now let us have a look at the questions, different questions over here. So the first question over here says a report about death of non-resident is received. Who has maintained NRO account with the nomination? So which one of the following is not correct? So balance in the account will be transferred to the NRO account of the nominee if he is also non-resident. Balance in the account will be transferred to the normal account of the nominee if he is a resident. Balance of the account will be sent abroad on the request of nominee, and none of the above. So which one of the following is not correct? We need to answer the incorrect option. So question 1 is here, and I want that all of you must be participating in this question session. So all of you must be participating in this question session. So kindly do answer at the earliest. So a report about the death of the non-resident is received. So let us suppose person A is an NRI and he is maintaining a nomination of person B over here. In that case, person A is deceased now, and further he was maintaining a NRO account. He was maintaining a NRO account, and in that case the balances should be transferred where? Balances should be transferred where? So balance of the account will be transferred to the NRO account of the nominee if he is also non-resident. If the person B is also non-resident, in that case the amount will be transferred to the NRO account of the person B. Is that true? Yes, that is true. And second, it says the balance in the account will be transferred to the normal account of the nominee if he is a resident. So if he is a resident of India, in that particular case, the balances will be transferred to the normal account of person B. That is also true. And balance in the account will be sent abroad on the request of nominee. Would that be possible? No, that is not possible. That is not possible, and that is not correct over here. So option C is the right answer in the case of question number 1. So in case of question number 1, option C would be the right answer. Option C would be the right answer. Is it clear? Now let us move to the next question, that is basically related to, it says, which of the following can be source of funds for investment by NRIs in India while investing in PIS, in permitted immovable property. So if NRI person want to invest in India in immovable property, in that case what can be the source of funds for investment? So try to understand the question. Person A is NRI person and he wants to invest in Indian immovable property, and from what sources he can use the amount? From what sources he can use the amount? So we need to recognize those. So it can be by way of inward remittances in freely convertible currencies, or it can be funds in FCNR bank account, funds in NRE Rupee account, or funds in NRO account. So what particular amount can be used so as to invest in the immovable property? So as to invest in the immovable property. So what would be the right answer? Question number 2. Question number 2, what would be the right answer in this particular case? Kindly do hurry up and answer it at the earliest. Kindly do hurry up and answer it at the earliest. Question number 2. So first thing we know that if there is inward remittance, definitely that can be used so as for the investment purposes, and also the balances of the FCNR account and NRE account can also be used. But in that particular case, the funds in NRO accounts cannot be utilized. The funds in the NRO account can be utilized so as to invest in Indian property. So as to invest in the Indian property, the funds in NRE in the NRO accounts will not be used for those particular purposes. That cannot be used. So answer will be option C over here. So option C over here is the right answer. Next question, it says, which type of following debits are not allowed in NRO account? Which type of following debits are not allowed in NRO account? So transfer of repatriable amounts to NRE Rupee account, remittance outside India of current income like interest, dividend, rent, etc., remittance representing sale proceeds of immovable property subject to prescribed limit, or none of the above. So which of the following debits are not allowed in NRO account? We need to answer accordingly. Kindly please do answer the question number 3 and do answer along it with the question number, so that it would be possible for me so as to understand that what question you are answering. Question number 3 over here. So what type of debits are not allowed in case of NRO account? So it is quite easy. We have already gone through the concepts over here. We have already learned all of these points. So which one of the following is true? So first of all, it says transfer of repatriable amount to NRE account. I already told you that the amount, repatriable amount, the amount which can be repatriable outside India, that can also be transferred to the NRE Rupee account. That is true. And for the remittance outside India of current income like interest, dividend, rent, etc., so that can also be repatriated outside India subject to the limits and subject to the payment of the taxes. that is also allowed. Then it is remittance representing sale proceeds of immovable property subject to prescribed limit. That is also true. That is also allowed. So you can also do remit the sale proceeds which are represented by way of the immovable property. So that is also allowed. So all these debits are allowed. So all these three debits are allowed. So the answer would be option D here. So the answer would be option D here. That is none of the above. Option D will be the right answer. Next question says account of a foreign bank. Account of a foreign bank opened in the domestic territory and domestic currency is called what? Nostro account, vostro account, loro account, or both A and B. So account of a foreign bank opened in the domestic territory. So foreign bank has opened the account in the domestic territory and in domestic currency. In that case, the account would be called what? The nostro account, vostro account, loro account, or A and B. So what would be the answer? The answer would be vostro account, because the account is opened by foreign country in our domestic territory and it is in home currency. So it is what? It is a vostro account. Nostro account is what? When we are opening our account in the foreign currency in the foreign territory, that is a nostro account. And when we are talking about some third party bank is opening account, is maintaining account with some other bank, that is a loro account. So that is not related to the loro account and nostro account. So the answer would be option B over here. That is the vostro account. So the answer is option B here. That is the vostro account. And next question, the last question for today video, it says which of the following is euro payment system? Which of the following is euro payment system? Swift, chips, target, or fed wire? Swift, chips, target, or fed wire? Which one would be the right answer? So which one would be the right answer? You need to answer at the earliest. We have already gone through these concepts. So kindly do answer it at the earliest. So SWIFT is what? What is the full form of SWIFT? If you remember, SWIFT is Society for Worldwide Interbank Financial Telecommunication. Society for Worldwide Interbank Financial Telecommunication. It is not Euro payment system. It is headquartered in Brussels. And the second system over here, it is the CHIPS. CHIPS is what? CHIPS is Clearinghouse Interbank Payment System. CHIPS is Clearinghouse Interbank Payment System, and it is USA based system. And also Fedwire is USA based system. So the option remaining with us is the target. Option remaining with us is the target. So target is what? The full form of target is Trans-European Automated Settlement Express Transfer System. So that is a Euro payment system. So option C over here is the right answer. So that would be all related to this video. So I hope that you must have liked this video.
So I hope that you must have liked the content of the video. So if you have liked the content of the videos, do give it a thumbs up, and further do share the video among your friends and colleagues who have been preparing for CAIIB, and do not basically miss the course which is actually available. It's actually a pro course and you need not to go through anything else other than this particular course over there. So do hurry up, enroll in the course right now and start preparing for the same.